put credit spread tutorial with Market Chameleon. This is what we're doing today. I want to show you a couple of filters, and at the end of the day we can search and find some trade opportunities on a super high market cap stock, Apple, Nvidia, Microsoft, all those that you know and love. Just an FYI, put credit spread, if you don't know, you sell option, you sell one put and then you buy the lower strike put as well, and you assume that you are bullish on the stock. Then you have three ways to win as long as you are bullish, as long as the stock stays up and as long as the put credit spread is below the underlying stock price as of now. Meaning option one, if the stock goes up, you make money. If the stock stays the same and your put credit spread is below the stock price, you make money. And third option, if the stock goes down just a little and stay above your put credit spread strike prices, then those are the three options that you can make money. So before we start, let's read a quick disclaimer right here and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. My name is Eve, also known as Finance After 40. So if you're not a member just yet, 7 days, link in the description for Market Chameleon. Now, in order to get to this screener, you're going to go here to screener, and we're going to go over today this one, bull put spread credit. This is what we're doing today. And this is the default screen, the expiration for the default. We're going to go over all those filters as well as those filters. But end of the day, once you are a member, have some time by yourself and explore all those trade ideas, and feel free to contact us, contact Market Chameleon, either send an email or watch their live video every morning and ask questions with your trade ideas that you have found using one of those filters, default filters. But let's go over all of this. So as I said, the default filter without anything, it says expiration for the monthly September 20, okay? And you can change all of this. You got yourself 14 days. Let's see if we got anything early. Yeah, 7 days, 14, 30, 60 to 30 to 60, 60 to 120. 120 to 180, and 6 months and beyond, 180 days. And you can also pick by expiration. Look at all those expiration. There's tons of possibilities at the end of the day. Now the spread between the strike, just so you know, is how much you're gonna pay for collateral minus the income that you get. And the default here is 5, meaning let's say the stock price is at $100 stock, just for the example, then the maximum that you will see on the results is 5, meaning the maximum that you can see is the put credit spread. For example, 95, sell the put 95, buy the $90 put, something like that. That's 500 collateral minus the income. Let's say the income is like $200, $100, then that 500 collateral minus your income. This is what you're paying, and as long as the stock stays above 95, you collect the entire income by expiration. But you can change it. Let's say for one, just for the example, it's the same thing. Let's say the stock price is 100, then the $1 is the 99, you sell the 99 put and you buy the 98 put. So, and then your collateral is $100 minus your income. Let's say your income is 30, so you're only putting $70 up front instead of like 400, 300 as we talked before. And you see here, without even filtering, just by this, we got a lot of Nvidia in here, but we got 185 results. And I'm going to show you what I like, but we're going to keep moving just for the example. Now, moneyness, this is important. Moneyness is how far the stock right now out of the money, in the money. The far it is out of the money, it's safer and I say safer in quotation, but it is safer. Of course, everything can go down in a minute, as we see every day in the stock market, but safer mean you have like a more percentage until to break even, 5%, 10%, something like that. So you see here the options spread is in the money, meaning let's say the stock is 100 and the spread, the put credit spread is 101.99, something like that. I don't like to do that because for me you aim for you need the stock to go up. What I do like is spread is out of the money, okay? Spread is out of the money, meaning the stock price is higher than the short strike. Again, that's what I'm looking for. Stock price is higher than the short strike, meaning the stock is at 100 and the short put that you sell is like 98. Okay, so something like that, and the stock and the short put that you buy is 97, basically. So the stock is out of the money. This is what I'm gonna pick, but we're gonna look at the other stuff. The long strike is at the money, okay, and the short strike is at the okay. I don't like at the money. I like out of the money. You collect less income, but you have free options to win. As I said at the beginning, if the stock goes up, stays the same, or goes down a little until your put spread level. So let's continue in the watch list. I mean, if you have a watch list and you just want to put all your Apple, Microsoft and stuff that you like, go ahead. I have a few, but I like to see all results. That's just me. Bid-ask spread. This is the tighter the spread, the better. I mean, there's more liquidity, but I'm not gonna mess around with that and just leave it be. And just so you know, look how many options we got. We're only at the beginning. You got all this that we're gonna go probably on other videos, and you got, as I said at the beginning of the video, you got all this which we're also gonna go at the and other videos. Just I like to sell put credit spread. It's nice, it's simple, it's not too complicated, and it generate income. So before we move on, let's just see what we got. More Nvidia, and I just like we're gonna keep going, but here it says just for the example, edge 80, win rate 83%, negative edge. Let's see what it is. I'm not doing the trade, I'm just looking. So we got a price 110, it's down like 7% today. And it says here, you see, if the price 110, exactly by our filters, and we haven't done all of them, I'm just looking at one example. We're gonna keep going on all of those, but just for this example, Market Chameleon found you a trade opportunities if you are bullish on Nvidia, and it says here, sell the 97 put, buy the 96 put for September 20. Okay, there it says Goldman Sachs event. Interesting. Okay, max loss that you're losing is $89. That's your collateral that will get released to you if Nvidia stays above 97. If Nvidia closes below 96, you will lose your collateral. Okay, very important to understand this. But as I said, if you, for example, for these trade opportunities, if Nvidia goes up, great, you will win. The free options to win with this put credit spread if you're bullish on Nvidia. If Nvidia goes up, you win. If Nvidia stays at 110, you win. If Nvidia goes down all the way until 97.01, something like that, by expiration in about 2.5 weeks, you still win. That's the beauty of put credit spread instead of just gambling on call long and all that. And if you just put the strike of 1, which means you have a small account, this is something to consider. Now let's go on the other stuff. Let's see what we got. So the next one, stock screener. Okay, I don't have stock screener, but you might have, and we're gonna go over all those options probably in the next video. Okay, I'll probably do another video in the next today, in the next couple of hours. But just to recap, all we did was going over the first 5 filters. Again, there's so many options. I encourage you to get Market Chameleon 7 days trial, link below, and explore, and feel free to send an email again to Market Chameleon. Hey, this is a trade idea that I found, and stuff like that. And play around with all this. Can play around with all this that we're gonna go over in future videos, and you can go by underlying stock ideas, payoff as at expiration, historical distribution, seasonality. Just on put credit spread, I'm probably gonna do like 5-10 videos, something like that. But it found, as you saw, one trade ideas, the 97.96 put, okay, 83% win rate. And if you wanna go by edge, just FYI means the more income, the more credit that you're getting. So let's double click on this, okay, and let's see what we got. Again, I'm looking for a stock that basically that I know, Avago, but I know they have earnings soon. Next earnings September 5. So if you want to filter by earnings, okay, we're gonna do this the next video because it's getting longer. But earning day, let's say after expiration, you see here before, after expiration or none, yeah, uncertain. So let's do after expiration or none. Okay, that's it. And now we only got 60 pages instead of 150. And if I'm searching by theoretical edge, but I'm also searching by a stock that is a high market cap. And look what we got. We got the SPY, which is the ETF. Interesting. Price 555.9. What do we have here? For September 20, sell the 554, it says, buy the 553. Okay, 14% edge. This is a bet that the SPY will stay the same. If the price now is almost 556, this is exactly what I'm talking about. If the price is 556, then if SPY goes up, you win. If SPY stays the same, you win because it's above 554. If it goes down all the way to 554.0.1, something like that, not exactly like that, then you still win. 3 options to win. However, from what I've seen, the NVIDIA trade as of now, because the win rate is what I'm looking for, is in this specific filter. And again, you got tons of filter to scroll. In this specific filter, we found the NVIDIA one, and now we have other stuff. Look at this, 97%, but I'm looking for market cap. So let's see by market cap. And if you double click in here, see NVIDIA, 86%, 97 put, sell, 96 put, buy. Okay, with the 86% win rate. So there's a lot of opportunities. I hope this was valuable. We barely scratched the surface on a put credit spread. This is going to be a longer discussion and a 7 days trial, and I'll see you on the next one. Yeah.